Let's talk about markets very quickly. A quick check-in. The stock 600 closed at a record 657 this week, roughly 10% up, although still obviously lagging behind the US. So basic resources, as in mining, doing well in Europe with semiconductors and banking. I love the fact that we're looking at semiconductors in there. That warms my heart. On the downslide, luxury goods, automobiles. Stellantis were down nearly 50%, and energy not doing so well. Is the crisis premium really over for energy? I can't see that, but we'll see. The FTSE 100 hitting new highs, the S&P up, the Dow at a record close, fourth straight weekly rise. One stat that I liked, so the 5 best performing European stocks of 26 are all semiconductors. So Soitec, AT&S, Technoprobe, Extron, STMicro, all up in the hundreds of percent growth. Alphabet is now looking for another 25 billion in bonds. Weeks after its first ever negative free cash flow quarter. Hyperscaler bond issuance is up nearly $200 billion through July, up 79%. So that's massive. So the debt is piling in and yields are now showing it, having to rise to match the risk profile. Mads, fill in the gaps on the market side. And then Sean, I want to come to you and see what your kind of take is on the broader, bigger public view.
Yeah, so just quickly on the Euro stocks and kind of the European semiconductor resurgence, because you're right, it's been driven by all kind of the fastest growing companies, or the most rising companies are semiconductor companies. I think you mentioned in there Soitec, AT&S, Technoprobe, Extron, and STMicro. And a lot of us can't necessarily tell what these do, right? They're not as popular, as famous as an NVIDIA. And digging a little bit under the hood, many of them do stuff that actually isn't growing that fast. Some of them even have declining revenue. And so what's happening isn't so much that they are growing leaps and bounds, as some semiconductor companies have been doing, but that the whole semiconductor train globally has been re-rating the multiples on these companies. And that is maybe a little bit of a warning signal that just because they get thrown into the semiconductor bucket and maybe they're telling a good AI story, they're automatically getting repriced and priced up, even well ahead of any results. So this is not a kind of South Korean memory maker story at all. It's a bit of a different picture.
Sean, I know that you don't necessarily, you don't do anything in publics, right?
Nothing at all, no.
No. How do you kind of look for themes or trends, or does it guide any of the decision-making process? How do you look at publics with regards to allocation to managers?
Yeah, it really doesn't affect it that much as an investment decision. So for us, when a company goes public and when it interfaces with the public markets, it's the exit event. It's the end of the journey for us. So if you backed a company at an early stage, or one of our managers did, it might be a 10-year journey. So if you think about the companies or the money that's going...
If you're lucky.
Yeah, it would be nice if everything went public in 10 years, but when I guess some things continue to compound the way they have, you sort of definitely not complaining from my seat. But thinking about like the new companies getting funded today, that money going in the ground, if they're really successful, it's a decade out before they really interact with those public markets. So it's not something we think about a lot in terms of themes, but it does, I guess, it sort of has a sliding scale of influence where if you're investing at the Series D or the Series F, or the Series Z, I'm sure will be coming at some point soon, it has more of an impact, but those are more sort of things for our managers to worry about as opposed to us.
Yeah, no, fair enough. Mads, anything before we move on? Any other market roundups?
I think maybe just SpaceX. They had their first quarterly announcement as a public company. Q2 revenue was up nearly 8 billion, up to 92%. Biggest component is Starlink there. They also have a big AI component today, $2.6 billion of revenue, but most of it is actually leasing data centers, kind of those big behemoths they built. So AI grew a lot, Starlink grew a lot, space grew a bit, 29%, so not nothing, but this is much more of a telco company today than a rocket launch company. In terms of how to price this business and where it should sit, nobody's got any idea. The analysts that cover the stock, they have a target that runs somewhere from $62 on the low side to $800 on the high side.
Whoa, what a
so
spread.
It's really all over the map. And the truth is, it's got very little to do with the earnings today. You're buying into Elon Musk enterprises. And some people believe in the genius of the man and others don't. And that's effectively back to the good old story, you know, in the short run, stock markets, they're voting machines. In the long run, they're weighing machines. And we're very much in the voting phase of this.
What's there? Did you see any news on the lockups? I know that this week, you know, we've started to see the first of the lockups being released, and I think they're going to basically tranche it towards the end of the year. And I'm wondering, and I saw a share price basically halved. I called it a few episodes ago that by Christmas it would be in half, and I think it pretty much is in half. But do you know anything about the lockups?
I don't think it's quite in half yet. I mean, you're talking relative to what, the peak or the
peak? Yeah,
IPO
225,
price?
and I think it was 110. I think it just dipped below peak. Not launch, no.
Yeah, I'd say I don't think looking at a peak price where some, you know, frenzy speculator bought one share at the peak price and then saying it's half of that is the same as saying that the price has halved. I think the IPO price is a reasonable benchmark. And yes, it was priced fully and full expectations when it came out. I think you've said previously, look, you'd expect it to go down and then climb back up. And it looks like that's some of what we're seeing now, certainly the downward trend, because it's a story right now. There's just, like, the numbers are good, right? Doubling revenue is good, but you're still looking at a company that does kind of 30 billion of annually revenue versus a price tag of 1.4 trillion. So it's completely off kilter from a size perspective.
Yeah, I mean,
Sean, you are in SpaceX, aren't you?
Yeah, we got a pretty big SpaceX exposure, so I definitely take that $800 on that sort of high predictions. That would be a very nice day indeed. But I think, like, the way we sort of think about it generally, and this isn't really a comment on SpaceX, but we've been lucky to have quite a few big public exposures where managers have owned big percentages and big dollar values of public companies. And when it comes to the lockups, it's not a case of it's 6 months and then you dump the whole position, because I'm sure the CEO turn around and shoot you if you dump 10% of the stock on the market in one day. What we sort of tend to find is that they sort of get drip fed out over a period of 18 months, 2 years, maybe a little bit longer, really depending on how the stock is trading, what their view is of the stock, if they've got any MNPI and all that sort of stuff. So when you get a big concentrated position like this as an LP, we generally sort of see it as like you gradually get that liquidity back, as opposed to it being sort of all in one shot once the lockup's over.